What's going on, guys? This is Aaron with Departures Capital. We're here with Antonio from Baby Investments. How are you doing?
Just perfect, a little bit busy these days, but overall it's just great. Thank you for having me on the show, by the way. It's been a long time since we have had a sit down.
Yes, I know, and it's crazy. Both of our channels have grown so much. Like you're almost at 20,000, I'm almost at 30,000. It's like, we started talking when I was at like 10 and you were at like just a couple. So it's awesome to
Yep.
see what consistency does.
Absolutely. Consistency is a big thing. Something that not everybody tells you out there, because it's no sexy advice, obviously, but consistency is a big thing in every business and in investing as well, by the way.
Exactly. So, I've seen you talking a lot about gold and silver. I've been talking a lot about gold and silver. It's pretty hot right now. Let's just start this off by saying, if you had to pick gold or silver, what would you pick to invest into right now?
Look, in one word, right now, silver. So people can, cancel that video, stop the video right now. Yeah, don't do that. Keep on watching because I'm going to explain why I actually prefer silver right now. And one thing that I like looking at is the gold to silver ratio. Now, obviously, people are sick of hearing that, but I do think that not many people understand it in depth and that they understand it enough to make an investment decision based upon. So first of all, there isn't something like one gold to silver ratio. I actually acknowledge three different types of it. So first of all, we got the most known, most commonly referred to the trading gold to silver ratio. Currently, that's at around, last I checked, I still got it on here, at around 70 or so, right?
Yeah.
Way lower than 126 that we saw during the stock market crash in March this year. But like, is 70 high or low right now? Actually, I think that people, if they keep on watching, they're gonna be able to answer that on their own. Like, because the next gold to silver ratio that I like focusing on is the mining gold to silver ratio, which basically, it shows us how many ounces of silver we get out of Earth's crust for every ounce of gold that we mine, right? And the answer is actually 8. So for every ounce of gold, we mine 8 ounces. We mine just about 8 ounces of silver.
Yeah.
And by the way, I recently, just as you did, I interviewed Keith Neumeyer on my channel with First Majestic Silver, CEO and president of First Majestic Silver, and he said the same thing. So what does that mean in terms of ratio, gold to silver ratio? Well, it means that the real life, so the mining ratio for gold and silver is at 8. Whereas, remember, as I just said, the trading ratio is about 10 times higher, at between 70 and 80 after the recent correction, right? But there's yet one more gold to silver ratio that I like using, and that's the actual, like, should we call it nature gold to silver ratio? And what I mean by that is, like, how many ounces of silver are there in Earth's crust? Like, for every ounce of gold, how many ounces of silver is there in Earth's crust, right? And again, the answer is pretty shocking because there's less than 18 ounces of silver left in Earth's crust. So again, the actual real life nature gold to silver ratio, and that's estimated by actual geologists, actual scientists, that's at exactly 17.5. So it's a quick calculation between the average of those three ratios. So we got the average between what we have in the world, what we mine in our day, and what we pay for our silver, silver and gold today. That's the trading gold to silver ratio. And if you take that average, that's at around 30. Actually, I believe I made a calculation a couple of days ago. It's like 31 or 32. So this ratio means that at a $2,000 gold, where we are at right now, on average, silver should be trading at least at about $65 per ounce, and not at under 30, where we are at right now. And that's just the average out of those three ratios, right? And to be honest, I know I'm kind of talking a lot, but I don't really like the trading gold to silver ratio. I find it to be quite unfair. The most commonly used gold to silver ratio, that's the trading ratio. I don't like it that much because we all know how fake it is after all. If you got a couple of minutes of experience in the gold and silver sector, that's all fake, right? And we obviously know that you're big consumers, like your Siemens and your Sony and Samsung and whatever, Apple and other electronic producers, they all need that silver to basically, put it into their electronics, right? They don't need gold. There's many substitutes for gold, but there could only be one substitute for silver, and that's graphene. I've actually done lots of videos on graphene, but graphene is just not industrial yet. And it can take up to 10 years for graphene to become an industrial material and an industry substitute for silver. So, having no actual substitute for silver right now makes for these companies to doing everything that they can to keep silver priced a lot lower than what its real life, mining and nature value suggests. And obviously, how do they do that? Well, you probably know that, Aaron, but they do that by market manipulations. Those are market manipulations that neither me or you can change. Only thing that we can do about it, though, is observe those market manipulators and trying to figure out how and when they're gonna lose steam. Like, for example, a global unrest that crashes the very little trust that people may have left in fiat currency. Well, that's a big event in terms of restarting reality for gold and silver, for silver specifically. And that's because the primary task for gold and silver in an average person's portfolio, in an average investor's portfolio like me and you, that it only has one task, right? Only has one task, and that is to keep one's wealth protected from the fake fiat currency that we have right now, that we unfortunately I wasn't even born in 1971, but when Nixon took the U.S. off the gold standard, the currency just became fake. And if an average investor wants to protect their wealth, they flee to gold and silver. So yeah, right now those market manipulations and your market manipulators, basically, who are those? Maybe you can think about that. That's your J.P. Morgans and your BACs, or Wells Fargo's. They can try and short silver as much as they want to keep it low priced, but it's at extreme conditions as right now. They are this extreme conditions as right now in the economy. They bring up investment demand for silver, and what that can make, that's gonna bring the fake that trading gold to silver ratio. It's gonna bring it a lot closer to its real life mining and nature value. And if you take just the mining of those two, so the mining, the average, if you take the average of the mining and the nature value of that ratio, that will be 12.75 exactly. I remember because I just calculated it a couple of days ago. So if gold, say, hits $3,000 in this market, which is a pretty, a pretty realistic number, I think, for 2020.
Yeah.
Right.
Yeah.
And if that happens, well, silver will have to skyrocket to at least $235 per ounce for that mining ratio to become 12, right? So yeah, right now, if I have to be honest, and I said I'm going to answer this shortly, but I'm not answering it shortly, as I never do. But right now, I would definitely go for silver, just because silver is really undervalued if you compare it to gold. What do you think about that, Aaron?
No, I definitely agree. I definitely think there's more upside in silver right now, especially in the longer term, the mid to longer term, as I talked about on your channel. So head over to Antonio's channel for the other part of this interview / video that we're doing right now. I give my opinion on a lot of the same questions, but I did have an interesting question for you. So regarding silver, it doesn't matter if you don't know too much about, or maybe you do know a lot about the history of silver. It's had two really big spikes in history. I'm not going to ask you to comment on that, but if you want to, you can, and talk about how it's different this time, or do you feel like it's different this time compared to the last two times? Because I believe it was in the late 70s, early 80s, we saw that the market was crazy manipulated and the price shot up. And then in 2011, silver went to $50 or almost $50. Do you think that this time is different than those times?
Yeah, I find those to be pretty dangerous words. This time it's different, and it's become a cliche, but seriously, it is. When have we seen such a global unrest in our lifetimes? We haven't seen something like that. We haven't seen debt levels as high as they are. We haven't seen, money printing as we've seen in the US in the last couple of months. The Fed has printed more money right now and bought more debt than they did during World War I and World War II. So it's just bad, and in the same time, the money, a lot more people are investing in the stock market right now. A lot more
Yeah.
people, a lot of average Joes, they've got their money invested into the stock market, and the stock market is completely detached from reality. They're a completely nasty divorce, right? They went through a nasty divorce. That's building a bubble, right? So what's going to happen when that bubble starts bursting? And it's not going to burst in one time, like in a day, I believe.
Yeah.
But when it starts bursting, when the stock market starts crumbling, a lot of more people will flee to gold. And actually, talking about history, it's funny you should mention, but see, the historical, I really like that gold to silver ratio. And the historical, like 20 years average for that gold to silver ratio was actually it's around 55-60, right? That's still quite unfair, still quite high, but it's what we have lived with for a long time, and we're still higher than this. So to me, again, there's just a lot more, growth potential in silver, but that does not mean that there's not a time to be going heavy in gold. And to put it again into simple words, I'm going to try to make this as quick as possible. We got that average, right? That historical average, that's at around 60. So when we are up to 10, 15, or 20% higher than that, and we are practically 20% higher than that right now at 72, we're already 20% higher than it. That means that gold is severely undervalued and it's being severely manipulated. Now, what we've seen in the past, and that cannot be different because that's just how gold and silver move. What we've seen in the past is that the gold to silver ratio eventually, the trading gold to silver ratio eventually comes down. And at the moment where that gold to silver ratio is at 20% lower than your average historical 20-year average, so that would be at around, so the historical average is at 60, 20% lower would be 48. So if the gold to silver ratio, trading gold to silver ratio becomes 48 or lower, that would mean the silver is running a lot more. I think that could be a key point to start turning some of your silver holdings, be that albeit physical silver or physical silver or silver equity through investing in through the stock exchange, silver miners, explorers, and so on and so forth. I think that's a key point to start thinking about converting that to cash. And eventually, if it falls even 10% lower, so if it goes to trading ratio, gold to silver ratio of 40, I think that could be a good point to start looking towards gold, because that basically history, I've backtested this a lot, and that shows us that that's the point where gold becomes undervalued, and that's where the best positions are to be taken. I don't know, what do you think about that, Aaron?
No, that's a great philosophy. And I haven't never looked at it that way. So that's why, it's awesome that we're doing these types of videos. I gave my opinion on your channel, on your video. So the viewers can just head on over to that video to check out.
Absolutely. That's actually a trick question, because only thing I wanted you to say is, well, I've already answered that. So people have very little to no choice but just, go to my channel and check it out.
Exactly. So yeah, I want to ask a quick question. Like, what's your price target, or everyone has a price target? What's your end of 2020? Where do you think we'll be at gold and silver?
Gold, I think $3,000 is easily achievable, and silver, people are gonna call me crazy. $70 silver is not impossible by the end of 2020. I don't go to silver, mining ratio, whatever you want to bring in calculations. $70 of silver just seems very reasonable to me, and $3,000 gold by the end of 2020.
Great. So now I'm gonna ask you one more question, and it's gonna be a two-part question. So first, talk physical bullion versus precious metal mining stocks, and then let us know, in terms of the mining stocks, what are the top three things that you look for in a company if you're choosing a new company or you're evaluating a couple companies?
Very good, very good. So I actually, I'm sick of those shameful plugs, but I just done a video on physical silver investing. It's very important. That's a very part of every man's portfolio, in my opinion. It's important to have a well-diversified global portfolio, of which there's 4 main asset classes that you got to include in there. Tangible asset class is one of those. And what's that? That's real estate, that's gold, that's silver. I don't like real estate. My way to play that tangible asset class is gold and silver. So physical silver just plays a whole different role in one's portfolio. I like having physical silver to the side, but not too much of it. And at the same time, also having exposure to gold and silver miners specifically. And I like splitting that. So, you know, I like my Royal Golds and my Newmonts, obviously for stability. Been holding those for long, but actually, yeah, before this bull market started in 2016.
Yeah.
And at the same time, I still like my Silver Crest, for example, near-term producers. And I also like my speculative side of the market. You know, your Silver Vipers. I like my Discovery Metals and Metallas and ADT and so on and so forth. Done lots of videos on those as well. But I like all three of those. I like holding. But again, should you buy physical or, you know, equity, the silver equity or gold equity? I think both. I think both are unmissable. You know, I'm trying to think of it, but I cannot find a way around it. As to, you know, the companies that you're looking to invest in, obviously I look for quality. Quality goes number one for me. All of the times, especially for my bigger holdings and my longer term holdings, like as I said, your Barricks or your Mag Silvers or your First Majestic Silvers, those are high quality companies. There's very little chance that something's going to happen to them during this bull market. And if they're already performing very well at the beginning of the bull market or at the end of the bear market, there's very, very little chance that something bad's going to happen to them. But that's just because of the overall quality of the company. But then when we're going to the more speculative side of things, you know, where the actual, I'm not going to say, yeah, I'm going to say, you know, the quick money, where the quick money is made in, because it really can be quick money. I'm actually looking for the management. You know, I want to see if the CEO has skin in the game. The most important thing for me, you know, if you're a CEO of a mining company and you want to come on to my channel, you know, we get contacted very often for interviews with CEOs. First thing I'm going to ask is, do you have skin in the game? Do you own your own company? And if you don't own your own company, is if the CEO, CFO, and the COO of the company, I mean the CPO, the chief project officer, if he don't own any shares of the company, I don't want anything to do with that company. I need to see skin in the game, obviously. And then obviously political risk is a big thing. So I am kind of scared of countries like, for example, Bolivia. Although, by the way, Bolivia is really picking up right now and political situation is getting a lot better. But, you know, the location is pretty important to me personally in terms of political risk. And so because the big money easily flows towards companies that are based in over there in the north of America, obviously, you know, because if you got a mine that a money manager can easily drive up to, it's a lot easier for them to invest money into that company rather than, you know, fly into the heart of Bolivia or fly into the heart of Africa, pay large expenses, and you know, especially in a time as the current one. And I also like looking at track record of the management. So not as much as what have they done and what kind of degrees do they have, but what were their previous projects and did they finish that on time, and did they finish in the budget, or did they dilute the stock too much and unnecessarily by unnecessary amounts where they basically ended up, you know, cashing a lot for themselves. And at the same time, you know, I like their track record, but when I'm looking into a track record, I like looking at the type of payment that they got in the past. So what I mean by that is I want a CEO that has done, like, let's say best case 10 projects, even 5 projects is good, 5 projects in the past, and he didn't get paid for any of those projects by, you know, bonuses or whatever. I want a CEO that gets paid by investing in their own stock, if you see where I'm trying to get at.
No, exactly. I couldn't agree with you more. And I like how you touched on management having skin in the game, because it just makes sense. If you're in like your own business, you make videos because you want to grow your subscribers and you want to talk about new companies because that's your business, just like everyone else. If they're just doing it for a paycheck, they're not as invested. They're not going to be as motivated, unfortunately. I hate to say it, but that's just the honest truth. That's just how humans are, right? So
Obviously, yeah, absolutely.
So
you know, a quick story actually that I want to add on it. I had a friend who actually he was dealing in cars. So he used to buy cars and then drive them to a different location where they're just worth more, and you know, just wash them, polish them, you know, give them a quick maintenance. And when it's your car that you're trying to go over there and sell the car, he's going to be like a lot more cautious. He's going to put a lot more effort into the car and make it better. And then one day we were actually driving in one of his expensive cars, and he was driving like a maniac. And I said, like, what up? Are you not trying to sell this car? And he said, well, this is a rental car. And I was like, well, yeah, this makes perfect sense. You know, if the CEO is running the business like a rental car, it doesn't make sense to be invested into it. But if the CEO is trying to sell that car down the road, meaning if the CEO owns shares of this of his own company and is trying to sell them, he's gonna, you know, just treat them better. He's gonna put a lot more effort into the company, and he's gonna do, you know, they're gonna do their best to raise the value for shareholders because they are shareholders.
Yeah, I agree. That's a great analogy. So we'll leave it at that, guys. Make sure to head over to Antonio's channel and check out the other part of this, because, you know, I'm doing a little more of the talking in that video. He's doing more of the talking in this video. But just give us a breakdown of your channel and, you know, why people should subscribe. I obviously say they should subscribe, but let's hear, you know, why they should subscribe.
Absolutely. So everybody's welcome to come out and check out the channel, you know, check some of the videos. But on my channel, we actually talk about a lot about dividend investing and growth investing in the same time, because I actually do both of those. Right now, we're heavily focused on silver and gold, but we also do lots of great pieces on interesting investment opportunities like uranium. I actually believe that uranium is like silver back in 2015, so at the very dawn of a new bull market. I was actually the very first person to talk about oil tanker stocks on YouTube back in February of this year. I've done lots of videos on tanker stocks as well, and stuff like that. Just, you know, I talk about very interesting investment opportunities that people might miss. So I think there could be a lot of value for people that just, you know, they want to come over and check it out. At the end, it's free and they can always leave if they don't like my hairstyle, for example. So Aaron, you know, thank you for doing this. I really appreciate your time today. It's been a while since we had a sit down, and you're still a rock star, and I still appreciate your time.
Of course. And the last thing I want to say is, you know, I just really respect your diversity. That's one thing I find so hard to do on YouTube is, you know, everybody jumps on a trend. Like right now, we're talking so much about gold and silver, and we just want to pump out those videos. But I really respect you for staying consistent with your diversity, because that's going to be so important in the long term for your business. So keep it up.
100%. 100%. Well, thank you, my sir, and I hope we can do this again soon.
For sure, that'd be great. Have a great day.